baby, got me staring at you. So I'm crazy, won't you bend that back for me? We won't stop, got your feet both locked. You get to fly with me.
Hey guys, welcome back for another daily crypto forecast. Guys, today is gonna be the last day that you see me face to face until Monday, because as soon as I finish this video, I gotta run to the airport and I'm gonna be on vacation for a few days. So I'm still gonna have time to do my daily updates, but it will be only screen recording. And yeah, if you want to follow me on Twitter, maybe I'll be posting some pictures there from my vacation. And then on Monday, it'll be back to normal again. So guys, very quick, because I have to run today, but very quick, I'm gonna run through all the time frames for Bitcoin BTC so that we have a general idea of what the crypto markets are doing in general. So basically, not much has happened for the past couple of days or three. So basically, mainly in this video, I'm going to be reminding you guys what I have been saying for a long time now, or if you're new to this channel, then you know it'll be the first time you hear it from me probably. But the general idea is that we are still downtrending in bigger time frames. In the monthly and the weekly, we are still full on a downtrend. But in smaller time frames, from the daily and smaller, we are uptrending, because in bigger time frames we are having an oversold bounce. So that's the basic idea of this video, where I'm going to be showing all the time frames, big and small. So let's just start with the monthly candles for Bitcoin BTC. And guys, as I was saying, we are still in a bear market. As you can see, we are downtrending. It's all lower lows and lower highs. But of course, we were super oversold, especially after this capitulation. So we need to have some sort of relief, even if it's temporary. So we are bouncing on the 15-month moving average right now, but the general trend is down, and it will be down unless we are able to break the downtrend resistance line here. The volume during the capitulation was very big. It was a significant volume. However, it's not even above average. This orange line that goes through the volume bars is the average volume for the past 14 bars. In this case, the past 14 months, because this is the monthly candles. So it didn't even go above the average for the past 14 months. You can see in the previous bear market, usually when you get capitulation, the volume goes well above the average. So what I'm trying to say here is that I still expect lower lows at some point, even if it takes a few months from here. Of course, I could be wrong. I've been wrong before. If we break the diagonal resistance line in the upside, and it shows significant volume and we break through it decisively, then I'm going to have to change my assessment. But until I don't see this, still downtrending in bigger time frames. Weekly, well, on the weekly, again, we can see we are still following this downtrend. We are below all the moving averages here. Well, the 20 and the 50, we had this bearish cross not that long ago, really. So we are still full bear. But of course, we are having an oversold bounce. So I have been pointing out the 20-week moving average many times, and it's a moving average that works really, really accurate for Bitcoin and for crypto in general, and for any market really. But specific for the Bitcoin weekly, you can see how the 20-week moving average is always respected, whether we are in a bull market or in a bear market. Check it out here. In the previous bear market, it always bounces off the 20-week moving average, and and it rejects. And when it gets really extended from the 20-week moving average, it will snap back up, boom, to touch the 20-week moving average, reject again, until we are actually able to get above it and stay above it, and that's when the bear market finishes. So right now we are below it, rejecting every time. You can see here 1 time, 2 times, 3 times, all this time here, couldn't break through it, and then it got completely rejected, capitulated. And now, because we got really extended from the 20-week moving average, I expect the price to snap back to the 20-week moving average. That's why in a smaller time frames, I'm calling for higher prices for the shorter to medium term. So I expect the price eventually to go and touch the 20-week moving average, whatever level it is that the price will be at the time that it touches the 20-week moving average. Because let's say now we break bullish and we go vertical up, we can make it higher to touch the 20-week moving average. But if we start going sideways from here, by the time, because the 20-week moving average is downtrending, if the price goes sideways and a little bit going up but slowly, by the time, you know, the moving average catches up, we won't be able to make it as high in price. So we will have to see, and that's why we look at the smaller time frames to try to estimate this better. But in general, for the weekly time frame, what I expect is the price to eventually touch the 20-week moving average and the downtrend resistance line. Daily. On the daily, as I said in the beginning of the video, from the daily and smaller, we are bullish. So on the daily, we can see we are already bullish. We are doing higher highs, higher lows. Not only that, this is a really bullish buy signal. When the 20 and the 50 period moving averages cross, they just crossed bullish. So this is a bullish signal that many swing traders take very, very serious. So this is a very bullish signal, and for now I will continue to assume continuation, and this means higher highs and higher lows for now until proven wrong. Also, we are forming an inverse head and shoulder here. Beautiful, like it's like a perfect inverse head and shoulder. However, it didn't break yet, so patterns mean nothing until they actually break. But if this inverse head and shoulder actually breaks and breaks out with volume, and it's a confirmed breakout, not just a fake out and then come back down quickly, if it confirms the breakout, then we have a target at, from bottom to top, we put this at the breakout level, and the target is at it's above $5,000. So we will see if we can, you know, if we will make it there. First thing is wait for this head and shoulder to break. Until it doesn't break, there's, you know, nothing to do here. 4 hours. This is the chart that I have been sharing in most of my videos. We had this tightening pattern or symmetrical triangle, and we had a break in the upside. The target in the upside for this triangle is $4,300. So I expect this target to be made eventually, and this target is still in play unless we start going below the triangle and start closing candles below this triangle. Then I'm gonna have to change my assessment, but for now this is the target, and this is what I have for the 4 hours. And on the 1 hour, guys, there's absolutely nothing more to say other than what I said for the 4 hour candles already. Is the same target, the same, you know, pattern for this triangle. So everything is the same for the 4 hours and 1 hour. We are basically waiting here for this 4,300 to be made, and I expect rejection from there. But if we get there, we'll take it from there. That's all that I have for you today, guys. Thank you very much for watching, and yeah, I will see you tomorrow. You won't see me face to face, but I'm still gonna be sharing my screen here. So thank you and bye.